Hello, everybody. This is Isaac here, and right now I'm actually rounding up a few people to join in this broadcast, and it starts. It started already, but it's going to be going on for the next 15 minutes, possibly. Could be less, could be more. So uh, if you're viewing this, it's because you've seen the link and you were able to click on it and able to see me on my broadcast. So um, let me see if this is working for a second. Um, okay, so that works. That works as well. Okay. So yeah. Um, in this broadcast, uh, I'll just be talking about um, a new business, and uh, I'll be giving away um, I'll be giving away 1 million uh, a 1 million BTC XBT to somebody, and and yeah, so hopefully all those people that have gotten this link will click on it, and we can get right to it. Um, okay, so only one person has clicked on the link. I don't know if they are actually gonna be. I don't see them in. I don't see them right now, but um, maybe I should send another Twitter feed. Yeah, I'll send another Twitter feed. 1 second. Let's see here. Okay. All right, so I sent another Twitter feed, and okay. So I'm actually deciding what I should talk about right now because nobody, I don't see anybody viewing yet, um, but maybe they'll come later. So, uh, first of all, um, I've been working on this Millennial Kingdom. Uh, it's kind of like a project or um, something that I've been doing lately, and each time I bring out new broadcasts with titled Millennial Kingdom, and uh, There's different things that I speak about, and for those of you that are new to hearing the term Millennial Kingdom, it actually the word Millennial Kingdom is first noted um, in the Bible. You can find it in Revelations, and you can watch my other videos. I go into detail about what it um, where it derives from, uh, where you can learn more about it, and um, what it means to us today. Um, okay, so 12 minutes has passed. Um, Not even 12 minutes, actually 7 minutes. So let's say for the next 7 minutes, I'll just talk about. I'll talk about uh, 6 phases of investment. How about that? I'll talk about 6 phases of investment. Um, so the 6 phases of investment, and okay, so I'll talk about what the Series A, Series B, Series C mean in the startup, and um, there are 6 investment stages. Um, there's actually a cool um, graph about how it actually goes. So, like the amount of money and will be like on the y-axis, and the stage of startup would be on the x-axis. So it shows here the seed stage as the first, and it's under concept research and a little bit of business planning. Second would be the angel investors, um, or it can fall into early stage, which is the product development and first commercial deals. Um, and then you go to the next one, which is Series A. Um, it says round 1A. I guess that term would be better to use. It's when I guess things are fully operational, and then Series B, or round two. Round 2B is expansion, and uh, a little bit of round 3, or Series C, um, is also expansion, and then after is the mezzanine, um, and it ends off on the x-axis saying ready for IPO, and that means um, initial public offer. Yeah, initial public offer. Um, So those are the six phases of investment stages. And yeah, I'll just read a little bit more. It says here, uh, what is seed and angel funding? If you're in an early stage, idea stage in your business plan and have utilized your saving and built a product which is already selling, you may expect some angel investors to be really interested in your startup. Or if you have an excellent idea and a really good team, then investors may be willing to help you build the product too. What is Series A round of funding? Series A round of financing is the first round of financing that a startup receives from a venture capital firm. The first time when company ownership is offered to external investors. This is generally done by allotting preferred stock. Valuation of the startup in the round is done on the basis of proof of concept, progress made with seed capital, quality of the executive team, market size, risk involved. Goal of Series A round of financing is to cover up salaries of people involved, additional market research, finalizing a product service to be introduced into the market. Series A round of financing is generally done when company is generating some revenue. Though it might not be net profit, the risk involved is at the highest in this round of funding. What is Series B round of funding? At this stage, the product service is already being sold in the market. Series B round of funding is required by the company to scale up to face competitors and have a market share. Goal of this round of funding is not only to break even but to also have net profit at this stage. Investment risk is lower and the amount of funding is more than Series A round of funding. Valuation of company is done on basis of performance of company in comparison to the industry, revenue forecast, assets like intellectual property, etc. What is Series C round of funding? A venture capital firm goes for this round of funding when the company has proved its mettle and is a success in the market. The company goes for Series C round of funding when it looks for great market share acquisition or to develop more product and services. Series C round of funding can also take place to prepare the company for an acquisition. It is the last stage in company growth cycle before an initial public offer, IPO. Valuation of company at this juncture is done on the basis of hard data points. This round of funding is more of an exit strategy of the venture capital firm. Let me pull up another one. Actually, this one was a good one. Um, let me pull up another one. Series A, B, C funding. What it all means and how it works. Um, to those who aren't well versed in the field of entrepreneurship and early stage investing, Series A, Series B, and Series C might seem like confusing terms. Fortunately, the terms are easy to understand. Series A, B, and C have nothing to do with the alphabet, rather, with the development stage of the companies that are raising capital. Series A, B, and C are necessary ingredients for a business that decides bootstrapping or merely surviving off of the generosity of friends, family, and the debt of their own pockets um, will not suffice. The main differences between rounds are the maturity levels of the businesses, the type of investors involved, the purpose of raising capital, and how it is ultimately allocated. The funding round begin with the seed capital phase of phase and follow with A, B, and then C funding. Once you understand the distinction between these rounds, it will be easier to analyze headlines regarding the startup and investing world. By grasping the content text of what exactly a round means for the prospects and direction of a company. Series A, B, and C funding rounds are merely stepping stones in the process of turning an ingenious idea into a revolutionary global company ripe for an IPO or initial public offer. How funding works. Investors are just altruistic, entrepreneurial, loving business people. Although they may be genuinely interested in the business, as many angel investors are, they ask for a portion of the business. In turn, for giving money before each round of evaluation of the company pie is typically released. Valuations derive from considerations such as management, proven track record, market size, and risk. To grow the pie circumference, more than a few slices need to be given away. In fact, most of the slices will be auctioned off for funding. Many small business owners with a big idea would rather have a silver of a massive pie than the entirety of a bite-sized tree. Planting the seed. You can think of seed capital like an analogy for planting a seed for a tree. This round nurtures the seed or the idea for the startup. The seed hopefully grows into a mature operating business or tree. When enough revenue is generated with the help of perseverance and investors' wallets, the capital raised during the seed phase is roughly around 500,000 to 2 million, but differs widely on a case by case basis. Seed funding raises substantial funds to support the initial market research and development work for the company. This includes figuring out what the product will be and who the users or consumers will be. Additionally, the money will help employ a team to do this work. Before this stage, many entrepreneurs are working alone or with just a few business partners with seed capital. The team will build and launch their product at their target audience. The key players in this round are more of the risk-loving type. Usually, angel investors or early-stage venture capitalist firms dabble in this less formal round of funding. Optimize Series A. After the business has shown some of a track record, Series A funding is usually in optimizing product and user base. Opportunities may be taken to scale the product across different markets. In this round, it's important to have a plan for developing a business model that will generate long-term profit. Oftentimes, seed startups have great ideas that generate a substantial amount of enthusiastic users, but the company does not know how it will monetize on them. Typically, Series A rounds raise approximately 2 million to 15 million, but this number has increased on average due to the high recent tech industry valuations or unicorns. The investors involved in the Series A round come from more traditional venture capitalist firms. Well-known venture capitalist firms that participate in Series A funding include Sequoia, Benchmark, Greylock, Accel, etc. How exactly the process works differs slightly from seed capital rounds. Since in Series A rounds, there can be more politics at play, a few firms lead the pack and may strategically do so. Angel investors also invent but tend to have much less influence in this funding round. B is for build. Series B round are all about taking businesses to the next level. past the development stage. Investors help startup get there by expanding market reach. There's already a big pie that's been cooking up in seed and series rounds. In Series B, venture capitalists have more of vision around what the pie will look like and how big of a slice they hope to obtain. Building a winning product and growing a team requires quality talent acquisition, bulking up on business development, sales, advertising, tech support, and other people cost a firm a few pennies. Estimated capital raise hovers over 7 to 10 million. Series B appears similar to Series A in terms of processes and key players. Series B is often led by many of the same characters on as the earlier round, such as Sequoia Capital. The difference with Series B is the addition of a new wave of other VC or venture capitalist firms that specialize in later stage investing. Let's scale Series C. In Series C rounds, investors inject capital into the meat of successful businesses in effort to receive more than double the amount back. For example, let's say that our meatless meatball shop from Series B now has the potential to put all Burger Kings out of business. Series C is about perfecting and, of course, continuing the scale fast and wide. Companies raise single digit to hundreds of millions in the final round. One possible way to scale a company could be to acquire another. Say our vegetarian startup has shown unprecedented success selling their specific type of meatless meatball in the United States. The business has reached targets coast to coast. Through confidence in market research and business planning, investors reasonably believe that the business would do well in Europe. Perhaps our meatless meatball startup has a competitor who currently possesses a large share of the market. The competitor also has the competitive advantage that we could benefit from. The culture fits, and investors and founders alike believe the merge would be a synergistic partnership. In this case, Series C funding could be used to buy another company. As the operation gets less risky, more investors come to play. In Series C, groups such as hedge funds, investment banks, private equity firms, and big secondary market groups accompany the before mentioned investors. Understanding the distinctive between these rounds of raising capital will help you decipher startup news and evaluate entrepreneurial prospects. The rounds of funding work is essentially the same basic manner. Investors offer cash in return for an equity stake in the business. Between the rounds, investors make slightly different demands on the startup. Company profiles differ with each case study, but generally possess different risk profiles and maturity levels at each funding stage. Nevertheless, seed series A, B, and C investors all nurture ideas to come to fruition. Series funding enables investors to support entrepreneurs with the proper funds to carry out their dreams, perhaps cashing out together down the line in an IPO or initial public offer. All right, so that is the end of this. Let me see how um, okay. So I guess then I'll have to focus on the views that will come later on after this broadcast is over. Um, those of you who leave comments and likes to this video, perhaps I'll be able to then um, do the giveaway of 1 million BTC XBT to whoever leaves those comments and likes. And since I couldn't gather up too many folks onto the broadcast, I'll be ending it kind of early because only one person clicked on the link. And so I'll end it in 4 minutes. Yeah, so I'll end it in 4 minutes. Perhaps I'll do another video in the future on the new business and a name that would be awesome to start this new business with. And I'll show probably some of you folks another video like I did with the one before this one on how to make $1 in less than 1 hour, not once but twice, not once, not twice, over and over again. Yeah, that video was the one that I did before this one. And I actually was just sharing a little bit on some methods that I use to anyways, I'll end the video now. Since I'm finished reading what I wanted to share, and I should probably end off with if you're actually, like I said, new to Millennial Kingdom, it's open. You can be a part of it. There is no requirements. Anyone is free to join. It's a community. It's very beneficial. It's very beneficial for everyone. I wish everyone would be a part of the Millennial Kingdom, but unfortunately, some people wouldn't be a part of it. But this video is going to end in a minute, so just remember to look at my previous videos and up till this one, and I'll be coming out with some more in the month of November. That the U.S. elections are coming up, and the candidates are Donald Trump and Hillary Clinton. So I'll be doing some videos, and maybe there will be a few things that I'll mention for the U.S. elections. And yeah, so thanks for tuning in. This is Isaac here, and I pray that you have a blessed year, and I pray that uh, everything will go well with you in your life, and I also hope that you would um, benefit so much from Millennial Kingdom and the broadcasts that are based on it, and teachings, and all the other stuff. So thank you for joining this, for viewing this video. I hope that you have a good day, and see you in future videos. Ciao.